So today, to do all of this data manipulation, we have one of our senior advisors, Darren Wright.
Thanks, Pam. We always like to do these events because we get to see a lot of faces that we have a lot to do with, so it's good to see so many familiar faces. You've all probably seen our disclaimer, so I won't run through that, but it basically says we weren't here and we didn't say anything, so I'll move on. It's me. So I thought I'd start with the global economy just to put some context around what's going on in the world, and I think, as you all know, the last couple of months have been quite interesting with a lot of issues. So I guess next year will be actually our 7th year of global growth, and spending output and profits are really higher now than they were in 2007. So we've really moved on from, I guess, the GFC period. Capital markets are more confident. Interest rates are likely to continue staying low, and housing prices are lifting. And what's really been a standout in a lot of the countries that have rebounded, like the US, is how strong the company profits are and how strong they are these days, despite the economies they're in. So if we look at, I guess, world output for 2015 and beyond, next year will be, again, the 7th year of growth. So I guess what we really look forward is interest rates are likely to stay low well into 2016. The interest rates in the US are starting to be talked about raising, but it's causing a lot of nervousness, so that's going to continue to be challenging. Major economies' official cash rates are still under 1% and likely to stay that for the next 12 months. The government is still continuing to be keeping the interest rates down, but on a global basis, the interest rates locally are quite high compared to a lot of developed economies. The government budget deficits are really reducing competition for private savings, so it's a real challenge, I guess, there, and the private sector is consistently saving more. In terms of global GDP growth, we're seeing a real mixed bag. We've got the red countries there which are really at really low levels of growth, and the more blue colours there that actually represent countries that are actually growing quite strongly. So we see North America, China, Asia and Africa are actually continuing to grow strongly, and Europe and Japan quite still slow, and Australia's sluggish but moving along. So if we look at the GDP growth and the unemployment rates around the world, you'll notice that the advanced economies, there's fairly low levels of GDP growth, and particularly low in the Eurozone and the Japanese country, because they're continuing to have some of those real headwinds to growing their economy. In the US, we're actually seeing improvements in unemployment, but in the Eurozone, we're seeing real headwinds there, with unemployment likely to stay over 11%, which is extraordinary. If you look at the youth unemployment in a lot of those countries, it's up to 50% in some countries. So, people under 25 are really struggling to get jobs in the Eurozone. So if we look at the other areas like the local markets, Asia really is a mixed bag as well. We've got the advanced economies, including Australia, which have fairly low levels of growth occurring, and Australia's unemployment rate persisting over 6% for a little while longer. But the emerging and developing economies, which you've heard us talk about a lot before, China and India. China's slowing ever so slightly, but still likely to retain over 7% growth, and India's picking up quite strongly into 2015, potentially catching up to China's growth rates in the near future. So I guess what does that really mean for us? It really means that there's less of a focus on our mining exports, because a lot of these countries are moving into more of a consumption phase. But what does that mean for businesses, I guess, in terms of exporting our services and our expertise? Because demand's starting to build. This growing middle class we keep talking about is still a massive opportunity. So some of the companies that are actually really benefiting from this, Ramsay Health Care, you can see the earnings and the share price growth has been extraordinary. And that's not because they're just finding more patients in Australia. It's really because they're turned into a global company. CSL, much the same story. They've been talking about the Ebola virus and how they're helping, and that they're likely not make any money about it because they want to give it away. But they're in a financial position to do that. So it's really a strength of these companies globally now. If we look at household net worth and debt in the US, again, we're seeing quite good improvements in household net worth and drops in debt. So that really is improving the confidence levels of the average consumer over there. But in Europe and Japan, continued flat sort of levels, and not really seeing improvements there either. So if we look at the corporates, as I talked on before, the US has actually rebounded, and we're seeing quite strong levels of profits there. So this is a bit of a graph of the corporate profits and share prices on the stock market over there, the top 500 companies. So you've seen that we've really had the recovery from the GFC, not just in share prices. So it's not this bubble that's forming. There's actually a sustainable level of profits there, which is the blue area. So it's not all hot wind. It's actually genuine recovery in share prices as a result of profits. Now, what's important about that is that there's actually been a real large move in terms of the amount of cash that's on balance sheets in the US now. And we think that really gives the economy over there quite a lot of flexibility, because being in the ability to actually deploy that capital in the private sector is going to be quite powerful going forward. Credit growth globally still remains quite subdued. Really seeing bad debts as good as they're going to get for a while, and they might be stable to degrading from here, but the banks are needing to have and manage that. We're luckily in Australia, a lot of the banks here have had tremendously strong credit criteria for a while, but we're starting to see more and more advertisements from second-tier banks offering cheaper loans. So we need to be very careful that we're not forming this empty piggy bank and that's your deposit for a home type scenario. Credit growth is still low and forecast to stay low. The Western economies will continue to go through this extended deleveraging effect. And, again, the newspapers would have us believe that housing prices are still surging because of rates of new borrowing. But the reality is that credit growth has not really recovered, and certainly not in the business sectors. Most of the housing lenders is being taken up by investors. So structural change is accelerating. The world is changing. It's not just the changing, it's the rate of change that we're seeing. We're seeing this urbanisation and the increasing middle class continuing to drive things around the world. The energy in the US, we've talked about the shale gas over there that's low cost and really is likely to be exported in the next few years as a net exporter of gas. And that's really creating some strength for them as well. And again, accelerating innovation. We're seeing a lot of opportunities for the world to actually take advantage of technology as it improves. 3D printing, the drones delivering parcels. You heard about FedEx and Amazon wanting to just drop parcel in your driveway and hope that somehow doesn't get eaten by the cat. We're seeing new energies. We're seeing biosciences grow, and there's more researchers globally than ever before. So this really is driving it. So in terms of the emerging economies and really driving this move from being a more of I guess a rural global population to an urban one. You've seen this graph from us before. And one of the big factors is this green line, which is actually the amount of people over 60. So we're seeing roughly 12% of global population over the age of 60 at the moment. But over the next sort of until 2050, we're seeing that grow to about 22%. So what does that mean for our businesses? And we all need to think about what that demographic change that we're seeing locally and globally, how does that affect our businesses, what services we provide, and I think it really does pose a big question for policymakers, I think. So we may need to expand Victor Harbour potentially. So just some indicative numbers for China in terms of growth, because we think that the growth we've seen is quite extraordinary, but they continue to look at numbers that are even more extraordinary. So the numbers back in 2010 moving out to 2020, we're seeing doubling in the GDP growth over there. The amount of investments also looking like doubling, and substantial amounts of increases in consumption. And again, the opportunities for Australia really are how we're going to help meet that consumption goal. So the global challenges, not so much from the major economies, but more and financial markets, more for the hits of confidence. Having confidence around things, and we saw just recently a little blip down and back up again in the stock market because of the few of the issues around the world. So this kind of confidence hits are the big issues. So we get military acts and political uncertainties, and often it's the response is increased regulation. Disruptive innovation is becoming an issue for many industries. So just to highlight one, Australian media is a good example of this, where we saw a huge drop in the traditional media turnover, basically halving over the last 10 years from 24 down to 12 million, whereas the new media has gone from 1 billion to 14 billion over the same time period. So you're seeing the destroying of newspapers and different ways of having it happen. I guess business people, we need to think about how these changes affect us, and not assuming that our businesses will continue on down the road with the same format forever. The other things like cashless society. We're seeing a lot of the world turning into not actually having cash in their pocket anymore. I actually like this stuff because if you go to the ATM and the card doesn't work, you can still get some cash in your pocket. But 1 in 5 people globally is actually in the US especially is no longer using cash. They're cashless society, and as we can see there, Australia is actually high on the level of participation in this. So eventually they'll phase out cheques and potentially eventually cash. Another innovation that you may have heard about, graphene. 300 times stronger than steel. This is made of a thin layer of pure carbon, so it's literally light as a feather, and each sheet of graphene is only 1 atom thick, and 1 square metre equals 0.77. So in 2010, the Nobel Prize winner for physics actually was researching this, has actually had a $1 billion grant from the EU to look into this further. So there's new materials coming out. I suspect our iPhones won't be made of glass much longer, and there's a lot of developments going on in technology. This is just an example, one of the more amazing ones. Global returns from asset classes have been interesting because since 2008, they've largely been derived from rising equity markets. So we can see the Australian share market and international shares have been the performers. Really, we've seen cash rates at all-time lows, and bond yields have been low, even though they've had a decent rally, and listed properties actually been pretty good. So it's interesting where the growth is coming from. We often talk about where the Aussie dollar is going, and you may have seen this graph from us before. We basically take commodity prices and overlay them over the Australian dollar, and you can see the really close correlation between commodity markets and the Australian dollar. So we believe that the current level seems to be about fair value, and there's obviously the trend is down at the moment, but if commodity markets continue to come off, that'll continue to influence the Australian dollar. We're also seeing people being very cautious, and this is the Australian consumer and business confidence graphs that get put out, and basically, as you can see, they're not at their very lows, but they're not exactly high either. So confidence is okay, but it's not at very high levels. So deleveraging is continuing, and since the household debt is still running close to 150% of household incomes, the unemployment rate's been a little higher. People are still a bit cautious. So it makes it very hard for the RBA because their interest rate policies really don't address those confidence issues. This is the Australian version of the share price and profits chart. So as you can see, we've seen a resurgence in profits, and profits in Australia have actually held up really well. The share price markets have improved, but they haven't really recovered fully. So it makes it interesting. Term deposits are likely to continue to ease further, and it's getting harder and harder to get a good rate for our clients, which is unfortunate. But banks are actually benefiting because they're still lending out at similar rates, but the cost of funding from term deposits is coming down. So it's widening that gap, which is continuing to drive their profits. So maybe it's better to have your money invested in the banks than actually in their term deposits, but of course both are important. Global earnings are actually driving the share prices. So it's good to see that fundamentals are still working in the long term. There's this close correlation between profits and share prices, and we believe that while the short-term volatility gets the attention of the media, the reality is that by focusing on the quality of what you own is particularly important. So locally, what's going on? We're seeing unemployment still high. Cash rates are supporting an increase in building approvals, but that's still challenging in some areas. And tourism starting to continue to grow stronger. So these are some of the challenges, but I think one of the big concerns we have is productivity and improvement in this state, which really doesn't seem to be occurring. So really having that move on is something we need to see. This has helped, and I'm sure many of you visited it, so I spent many a day there this last year. And that's obviously helping raising the profile, and that's a little part of it, but there are other pockets of issues in South Australia. So the opportunity for Australia really is to support global food demand. We think this is a really big trend that's important. I talked about the consumption in China being an ongoing growing area. So being able to actually provide really good quality food and in a fresh and fast manner, that this is an opportunity if we can get it to rain the right amount here. Increasing demand for animal products is still very high in importance, and as they eat more and more meat in China and other areas of Asia, that becomes a bigger issue about how do you feed these animals enough grains when world crop areas aren't increasing. So corporate farming is probably the biggest growth sector that we might see in the future. Where are we headed? This is just a little idea about where population growth. Again, we're seeing this growth in the ageing population. Not really a surprise to anybody, but if you look out a bit, we're seeing this substantial amount of growth in the amount of people over the age of 65, and over 100% growth in the amount of people over 85 over the next 20 years. So again, what does that mean for your businesses, the kind of people you service, how you market to them? they're using technology more, which is helping, but it means you need to think about this stuff. Now, I just want to finish off quickly by touching on that recently a group of us sat in our boardroom, and every year we produce a report about our 10 best investment ideas. We reported this time last year on what we thought would happen this 12 months, but we were going to release the new report in January, and we're going to have some seminar series and some briefings as a result of that, because there really are some very interesting trends going on in the world that we think provide some very interesting investment opportunities. So, some of this stuff like, your global ageing and healthcare issues and US interest rates and a few things like that we're going to be talking about in the publications. So we'll be running some events. We're very interested to invite you all along because we think that it will help you and your business. Happy to have some chats about perhaps your staff or your clients actually coming along to some of those, because I think you'll get a lot of traction out of it. So that's all from me. You've all had your meals come down by the look of it, so I'll give you a moment to eat that, and then we'll introduce Peter, and he'll take it from there. Thank you very much.